So welcome back to this interview. And today we have Philip Gunst here. He is a shareholder in Colonial Coal, one of, if not the biggest stories of the past 2 years, really, when it comes to M&A outside of sort of the typical precious metals industry. So it's nice to have you on here again, Philip. And it's been like, I think, 2 years now. Is that it? So
Yeah, 2 3 years. Yeah,
yeah,
2 3 years.
exactly.
Yeah, thank you
And
for having me back.
yeah, and yeah, can you just talk a little bit about yourself, introduce your background to your audience, and
Yeah,
what do you do? Who are you essentially?
yeah, sure, of course. No, as you mentioned, my name is Philip Gunst, based in Copenhagen, born and raised here in Denmark. Have a business background, but have sort of for the past is it 8 9 years now been a partial management consultant, and then had a short stint on the other side of the table working for global transport and logistics freight forwarder DSV as a commercial strategist in their team, directly reporting to the group CCO, working in commercial strategy, corporate strategy, helping and basically advising companies on how to sort of shape that. And then I think on the side, and what most people know me for, at least both here in Denmark, but also in Canada, my sort of investment background and interest, which started now 12 years ago or so, starting just analyzing stocks, companies, quite autodidact, and then ended up somewhere around 2018 in the mining industry, and have been quite active on especially Twitter, now X, writing analysis, and in the past 5 or 6 years mostly for Colonial Coal.
Mhm. And just before we jump into Colonial Coal, I assume really your sort of favorite industry, let's call it, or sector would then also be the precious metals part of the equation.
Yeah, yeah, exactly right. So I think in when I sort of jumped into this sector back in 2018, it started with gold, and then obviously I think that was also when the copper frenzy started. So I think copper and silver also came onto it as a natural next layer, and then I think you can say everything within the sector really became a focus and an interest, because then you had the rare earth that started being interesting. You had lithium, nickel, so on and so forth.
Mhm.
And then some crazy guy reached out to me on LinkedIn with Colonial Coal,
Yeah.
and then I've basically just been fanboying that name for a long time now.
Yeah. Well, we've all been to a certain extent. I was in it too for quite a few years, but then I found myself having to pivot at some point. So,
Yeah.
for the audience, can you just explain sort of the Colonial Coal story from the beginning, and then we'll merge this into what it is now and why this might be an exciting time?
Yeah, sure. So I think Colonial Coal is a development stage company within what we call metallurgical coal or coking coal. Have a quite big deposit in Canada and in British Columbia, 695 million tons of this metallurgical coal. And I think the story really starts with the CEO, David Austin, who was part of Western Coal that was sold back in 2010 to Walter Energy, and also back in 2012 with Nemi that was sold to Anglo. So I think he's sort of really the catalyst for the name and his experience. And then he managed somehow, I think it was in the mid tens, to pick up parts of the portfolio he actually sold back in 2010 and 2012 to Walter and to Anglo, which is Huguenot and Flatbed, two of these resources that are now part of their deposit of the 695 million tons. So I've been sitting there, and they spent the first years drilling it out and getting to that resource. And then I think more or less since 2018, 2019, they've been for sale or have been exploring an exit of some sort, either through a joint venture or a strategic partnership or full scale sale. And I think it's fair to say that they've been close a couple of times. You also yourself, Lucas, was following the story
Yeah.
for a few years where it was so close, allegedly at least.
Yeah.
Yeah, exactly. And then you can say it has just evolved into taking a long time. Basically, obviously, I also know that from my own background that M&A cycles are very different, and especially in the case of this particular resource or this particular commodity, given that it both has a political angle to it, given that coal is something that we shouldn't continue mining for the next 100 years, given the pollution. So I think there was at least a part of my time with the company that was becoming a bit woke out there, and we were really trying to pivot away from coal and fossil fuels. So that was obviously one story, and then given that you can say it goes into to the steel production, so it's something that's used in blast furnaces to really do steel production. Then it's also really driven by the industrial sort of growth in certain parts of the world, where especially India, China are sort of the big runners on that end. And that obviously, given when you know how those countries are designed by nature, in the sense of being very state heavy, very bureaucratic, that also means that buyers for colonial coal will always have some sort of lean towards state-owned companies, and that's also why back to politics and why this probably has taken as long as it has. Is also that there needs to be the right political climate and environment to really make a deal.
And, just to give viewers and perspective, I mean, this has been going on since, I think, 2019. And you had you can see it in the chart clearly. I mean, in like 2021, if I have the dates right, there was a big spike, India, China rumors going on. Then in 2023, I think it was Citibank and, them joining the process and really making people excited. And now, well, I don't really know much of the story now. I mean, I am familiar with some of the details, but can you talk a little bit about the recent events and why this might be different this time?
Yeah, sure. So I think one of the things that you also, when you were a shareholder back then, was a little bit annoyed with, or at least was frustrating, was the limited amount of information that was publicly available, right? So every now and again, David did a webinar or an interview, and that sort of drove a lot of the interest and the information around the company publicly, at least, right? Where if you had to know a little bit more, then you had to call him, and I think it's very few people that actually have that access to him, and then he's probably also, given his nature being quite old school, I think it's also few people that actually manage to get a lot out of him. So I think the story throughout the past 5 years is really that there hasn't been a lot of public knowledge and information about where they are. And then what happened basically in November 2025, so last year, which is now what, 5 months ago, was that they came out with what is called in Canada a material change report. And it looked initially, it looked like a nothing burger, really, in the sense of it, because it was posted together with the annual general meeting information. So everyone really thought, well, this is just a classic update. He used that opportunity to really say a few words to the market. But what was interesting was the phrasing. And he said that they were in accelerated discussions with several parties about a strategic partnership. And I think that's the framing you have to use publicly when you're exploring what could be a sale, but also a joint venture or whatever, right? So I think that really gave some perspective to the market and to the shareholders, and there is no doubt that Colonial is quite retail heavy, even though the free float is somewhat small from having Warren Irvin, the Emrys, and so on and so forth. But it just is a quite sort of retail heavy float, which means that I think it was the first kind of information that many people got, both in, I think it was 18 months since David had a public appearance in a webinar or an interview, and it was the first time he really put out a press release since the likes of, I think actually the last time was in association with them getting a new CFO, which I think it was in 2022.
Yeah, and I think before it was options or something. So like in terms of really material press releases, I mean, this has been maybe, I mean, I don't have the exact details in mind, but maybe this is even the first time that they really put out something like in terms of the process. So
exactly. So I think that created a lot of excitement in the market, and obviously it jumped a little bit. I think there is still, and back to your point also, it has taken a long time, and then there's been these spikes. So I think many people probably also just uses this to sell out, which is also why it doesn't take these 50 or 100% jumps. That's not really how Colonial works, because people are selling into the buying pressure. But what has happened then over the past 2 or 3 months after the material change report came out is really that there's been an immense sort of political change. And I think under Justin Trudeau, I think the relationship between Canada and India and Canada and China has been very weak and very shaky. And I think I, for one, has really underestimated in the past how important that has really
Yeah.
been as a catalyst to make a deal. I think you can probably also talk into that about it wasn't really something we talked about in 2022 or 2023, because we thought, well, he's talking with the company, so that should be enough, right? And we knew that the companies had gotten the assurances from Justin Trudeau and from David Eby, but it seems that it has had a bigger impact than we thought. And what has really happened in the past 2 or 3 months is that Mark Carney has been in China, first prime minister in Canada for a decade, visiting China. You have had David Eby, the premier of British Columbia, visiting India on a trade mission, which is also a first. And now with everything that's going on in the US with Trump and his tariffs, then many other countries need to pivot away from US as a trading
Yeah,
partner, which
diversifying essentially,
sorry,
diversifying
yeah,
their
exactly,
dependence, right? Because yeah,
exactly, exactly. Which means that there's been a lot of chatter about how can that also become a thing, and then right now, and especially in the past maybe 6 or 12 months, there's been a lot of focus on strategic minerals or critical minerals, which for many has really meant rare earths and what goes into data centers and the entire AI craze. But what has been interesting to see, especially in the past month or so, is that now there's chatter that coking coal, metallurgical coal, will be a strategic or critical mineral in Canada.
mhm,
That's still not approved, but it became a critical mineral in the US 3 months ago.
yeah,
And just last week, it became a critical and strategic mineral in India as well.
mhm,
So right now, the path, or you can say the story, really changes for the better. And then there's just a lot. I'm quite shocked how openly the Indians are about what's going on right now and how they're positioning
mhm,
themselves. It was quite interesting actually, because I met with Warren Irvin in Copenhagen back in, has it been November, maybe October? Yeah, it must have been November, because it was after the material change report came out, and Warren told me that he's been sort of working with Indians before, and they really like to have their politicians go up there and take the credit for a deal way before it has even been staged,
yeah,
and they want to take all the pictures and sort of do the handshakes
yeah,
and
yeah,
stuff publicly. And sort of I was maybe a bit hesitant to really trust what he said, because, well, is it really like that? I haven't been working with Indians as much as I work with the Chinese, but what is going on right now with them, sort of the trade missions having the sort of pictures taken now? This article came out in Reuters last week that, well, the steel minister of India all of a sudden said, well, NMDC, one of the big state-owned steel companies, are exploring acquiring coking coal assets in
mhm,
Canada, which sort of, when I reached out to a couple of sources and trying to figure out, was this something that was planned? It wasn't something
yeah,
that was planned. It was something he just like came out of the sleeve and really surprised everybody, because also when you're having these conversations, obviously you're on the NDAs, right? So it was a little bit shocking for me that is happening like this right now. And now this week, NMDC has also introduced or established this wholly owned subsidiary that is supposed to acquire assets within critical minerals. So they are sort of making all the
mhm,
plumbing and all the preparation to get ready to do an acquisition. And obviously, the Colonial Coal hasn't been mentioned, and Colonial Coal hasn't commented on it, but it seems pretty clear that Colonial Coal might be a puzzle piece in that bigger picture that's being shaped right now.
mhm. And this is sort of walking directly into my question, and that would be like, how, like, from a personal perspective, as you have to manage risk, you have to manage your portfolio. Like, what is your personal strategy? Are you just like trimming here or there a little bit? Let's say the price has gone up, and just to protect the downside, or like, are you just like diamond handing it? That's how people would say it. So like, what is your sort of personal strategy navigating this rather speculative investment, right?
Yeah, no, it's a good question, and I think I've also gotten quite a bit of smoke in Denmark for this because I'm a little bit of a public figure here due to some of the appearances I've had in the past, and I think it's quite shocking for people when they get to know that I'm all in Colonial Coal,
Mm-hmm.
and also that I have been sort of buying more and more over time. What's actually quite interesting when you're looking at my portfolio, I think, obviously, given that I've been all in for the past 2 or 3 years, my return has really been following the chart of Colonial Coal. But
Which is
when you and
volatile.
I started, yeah, exactly. But when you and I started chatting back in 2021, 2022, I was a young guy, right? I'm turning 29 this year. So back then I was probably 23, 24. So I didn't have a big portfolio back then, and working in management consulting and having the job I've had, I've managed to really put a lot of capital to the side and into my investments. So
Mm-hmm.
I've actually been a little bit blessed that it has taken this time
Yeah.
because now my portfolio has a size where the return will be quite significant
Mm-hmm.
if it turns out the way we hope. In terms of how I act in the market, I think I'm not really trimming. And the reason for not really trimming is an assessment of what's the upside. And I think we've talked a lot about $1 per ton, which is approximately 4.8 per share. We've talked a lot about $2 per ton probably being the roof or the ceiling for an exit.
Mm-hmm.
I think that has changed with sort of how the market has changed, both for coking coal and metallurgical coal, but also for how India is acting right now, how China is acting right now, and the fact that I think it's sort of imminent that Glencore will also be there. So I think we have the competitive tension, and I think we have the interest at the table that will be able to create a little bit of tension and also a bid war that might take this higher than what we have maybe had as a
Mm-hmm.
base case 2 or 3 years ago. So no, I'm not shaping or sort of I'm not taking any risk or chips off the table yet, even though it has sort of grown by more than 100% since
Mm-hmm.
mid last year. I think if we start hitting before a bit, if we start reaching maybe $1 per ton levels, then I might take a bit off the table. But I think until then, I think I want to ride it out and see what will the first bid look like when that comes, hopefully, and also see what is really going to be the output of that bid war then,
Mm-hmm.
because I really believe that we can see three, maybe even four players at the table. And I think where the hypothesis in the past has been that the Indians will be coming in with a low ball bid and then they will leave again. I think given what they're doing right now politically,
Mm-hmm.
I can't see that happen. I simply can't see that happen. I think they will come in with a strong bid, and I think they will also be willing to really do bids over the top of some of the competitors because they need it so badly. And if they don't get Colonial, I think they will be in a quite
Mm-hmm.
difficult situation for their long term supply.
Mm-hmm. And I'm sort of curious, like you sort of were a little bit dancing around the topic, and that is like really why is metallurgical coal so important, especially for our supply chains? And can you sort of like at least like in a short manner explain why it is as important as it is?
Yeah, sure. You can say I was talking a little bit about it that it goes into the steel production, right? So compared to thermal coal, it's not used for heating at all. So it's not really something that at the minute is substituted by any other sources or you can say usage of other commodities. They're working quite hardly, and I've also seen news from China that they have opened the first blast furnace steel production with green steel, which means that they're using hydrogen. But hydrogen is not really scalable at this point in
Mm-hmm.
time. And even though you would think that the usage of coking coal would fall over time, actually the need is growing, especially given the growth of India industrially. So the economic growth of India is now surpassing that of China, which I think hasn't really been the case for many decades. So the pace of how India is growing right now, and also the continuous growth of China, really makes the need for coking coal and hence also the need for steel just keeps booming, right? So I think for the next 10 years, I think we will continue to see a growing demand for coking coal and steel. And I think then you might say, okay, over the next 20, maybe 30 years, that will be a slow decline. And I agree with that. Also depends a little bit on how quickly they can make hydrogen commercial. But I think until then, we will continue to see this. And I actually talked to Warren Irvin not too long ago, and he said when all of this is said and done, and we sit here 10, 15 years, and we might have sold Colonial Coal for $2 per ton, we will be so shitty pissed about it, because then the price of coking coal will likely be $1,000, and we could have gotten much more than $2 per ton. We should have just put it into production ourselves, right? So it's also a little bit that right now the market has a certain fatigue in Colonial, because we've been waiting for so long. But in this market is actually a quite attractive asset to own. And the need for steel and blast furnace and hence coking coal will continue to grow.
And I mean, you were sort of saying that it is very attractive. I mean, I give it that definitely from a speculative point of view, and valuation wise, what you can see, Colonial Coal is definitely a more attractive sort of speculative bet. But just sort of my question, and sort of something that I battled with every time when I was, having these long holding periods, is when to exit, right? I mean, it's really a story, a continuous story, and it's hard to really quantify when you should maybe leave out, and it's like, okay, well, I have opportunity costs, right? I mean, right now it's sort of the precious metals market, right? I mean, Colonial Coal has done very well, but it hasn't been like living up to some of the comparables. But obviously, there's always comparables that might be better in our time horizon.
Yeah. No, I think you're absolutely right, and I think many many shareholders in Colonial has also been looking at what has been going on in gold and silver and copper the past 6 months, and have been biting their own fist because they're so annoyed that they haven't been part of that return, right? And maybe someone has been a little bit wiser than me and have diversified, and then they've gotten a little bit of their, you can say, share of it than I have. But you can say, I think your strategy in Colonial Coal needs to change depending on whether you're a short-term speculative trader or whether you're there for the long-term fundamental piece. I think right now it's the third time in my time that we are above $3. I think that has been a pretty solid indicator in the past that you should probably take a little bit of chips off the table. You also know that we were in 343, I think, in the summer of 2024. And we were back at 110, I think, as the lowest point last year, right? So we lost 75, 80% over the course of less than a year, right? And now we're up more than 200% from that again. So it's really, it's difficult, I think, if you're a trader, and that's also why we see the volume we're seeing in the market right now is because there are so many that are actually exiting. There's also been some chatter on CEO that a certain big shareholder in the UK has been exiting his full position, and maybe even the family's full position, which is several million shares. So I think many are tired and sick and tired of the waiting. I think honestly, David has been crying wolf too many times. We've been too close. It can happen any day. I think we've heard
too many times.
Right? Too many times, and that's for sure. I will, however, say that I think it feels different now. I think it's mostly due to everything around it. I think in the past, whenever we were close, it was the market telling us, or it was David telling us. And I think right now it's not just David or the market telling us. I think it's also news articles, third-party sources that are telling us that we are close. So I think it's different this time. However, I can't really blame people for taking some risk off above 3. I think that's totally fine and understandable, and I would probably do the same if I didn't have the conviction I have. But I think that's just how it is.
And you sort of talked about David here. I mean, what's your view on management? I mean, they haven't been as vocal as they've been before. They don't have as much of a public presence as they used to have in terms of like providing information that they can to shareholders, right? I mean, not to say that he can really talk about the full process and exactly tell you where they are, because it's material information. But how do
Yeah.
you see it? I mean, you have a lot of people frustrated with David. Some might perceive him as, at least the public side, having mismanaged the communication. So, like, what is your view on the management team?
I think it's a generational thing. I think that's a strong starting point. So if I would to lay the sort of foundational brick of why that's the case, I think it's a generational
Mm-hmm.
thing. David is in his late 70s, and I think he's really an old school guy. I think he's not really into what you and I would probably perceive as best in class investor
Yeah.
relations. I think he has hired his son as the investor relations officer. And I think if you're asking 50 shareholders in Colonial Coal how many times they've talked to Shane Austin over the past 5 years, I think that will be a very small number. And I think that's maybe the second part of the generational thing, is that I think David likes control. He likes to control the narrative, and that's both for the better and for the worse. And that obviously is also because then if things are not going as well, then he can steer the narrative in a bit more positive direction. And if things are going extremely well, then he can maybe put it a bit under wraps and not make sort of everyone too euphoric about what's going on. So I think he likes to control the narrative. But I think it's also important to really emphasize that many of the big shareholders in Colonial Coal are management themselves. So David, John, so on and so forth, but also Warren Irvin through Russell Asset Management and the Emery family. And both of those have been here for more than a decade. And that also means that when you're owning 10, 15, 20% of a company like Colonial,
Yeah.
I think you end up being quite close to management. And I think if you ask David, I think he might say that both Warren and the Emerys are friends to him.
Mm-hmm.
And that's also making it a little bit difficult, because then you are managing your biggest shareholders with the biggest impact and the biggest interest, while being friends with them and meeting them for a coffee maybe every week or every month or every quarter, right? So I think it's also difficult to really for him steer the expectations and steer what's really right or wrong. So because you and I would like to say, well, why don't you do some marketing? Why don't you go to conferences? Why don't you do webinars every 3 or 6 months? And obviously there's also a budgeting thing to it, right? He's not notoriously known for spending a lot of capital, and he has really managed to not do a lot of dilution over the course of the years, only through the likes of options, right? So I think he's been doing quite well at steering burn rate and cash flow with sort of telling the story, so to say. But I think it also comes down to, should they have sold it 5 years ago? Yes, they probably should, and that would have left this sort of conversation of how much should they really have done.
Yeah.
Me as a management consultant, I would probably approach it differently, right? You have some scenarios of what's going on, and then we have some contingent moves depending on what's happening. So if we didn't sell it in 2021, okay, then we need to do something else. Then we have path A, which is going to permitting, or we have path B going to production, and we have path C that's continue selling. And if we continue to try to sell the company, then we need to do some marketing in order to ensure that there is still some interest about the share price, because otherwise we end up going back to $1 or whatever, right? So I think it's also maybe a little bit of a stay and hope strategy that they've been executing for the past 5 years, which I probably wouldn't have done myself. But I can also understand that if you really believe that you have been close 2 or 3 times in 5 years, then of course you don't all of a sudden pivot away and start permitting on and start putting it into production. So I think there's been made some mistakes in the past by management. I think the reason why management are acting the way they are is also a generational thing, and I can't really blame them for that. But I think it's also down to what is the team you are putting yourself around, and there I think David has prioritized keeping the control.
Yeah, I mean, that's sort of, I can definitely see that sort of perspective that David likes to sort of keep the narrative, be a little bit in control of things. I mean, it's also partly of what he has to do. I mean, being the CEO of a company, right? It's sort of part of his job as well, in a certain
Yeah.
sense. So
Yeah, and you can say by the end of the day there is a board, right? So if the board was was unhappy with what he was doing,
Yeah.
then they could have removed him, right, or asked him to do something differently.
Yeah,
So
but
I think
I
that's
mean, in
also
small cap companies, you can say that there is a little bit of a
yeah,
misalignment in a lot of instances in terms of the board and
yeah,
shareholders. So,
for
yeah, even
sure.
for big companies, right? I mean, Tesla is the prime example for that. If we talk about
Yeah,
a board that is in bed with the CEO essentially. So, uh,
yeah. No, I agree. I
yeah.
agree. I agree.
And sort of getting to my last topic, and this is a little bit outside of Colonial, and that would be like, how do you, being in the precious metals market sector and watching all of these trends in the past 2 years. I know you've been more in Colonial, but have you really looked into gold and silver? Like, what's your view? Do you think that this might be more of a structural, a little bit different than what we've seen in the 2000s, or can you sort of offer a perspective there?
So I think I started looking into gold, silver, and copper in 2018, as I mentioned. Back then, the
Mm,
price of gold was $1,200 per ounce. So
mm,
it's been a ride also since then. I think it's a fundamental change to what we've seen in the past. I think it's very driven by the uncertainty of both what's going on in the world. So you can say wars and everything out there, but also the weakening of the dollar. I think Donald Trump is acting in a way where the strength of the dollar is not really, you can say, superior or important to him.
mm,
So I think that's also driving a lot of it, and you can see a lot of the central banks around the world are also positioning themselves in that way, because dollars have really been the safe haven of the past, and that's been the key and main currency that are used around the world. So I think there is a fundamental change of the narrative that's driving the growth in gold and silver. Can it continue? I actually said a few months ago, before the final sort of jump now of silver above 100. I think silver is a little bit different. I think it will continue to be an industrial metal. We have a big, back in Denmark here, we have a big jewelry company called Pandora, who's also quite big globally, and I think they
mm.
pivoted away from silver now into platinum. I think you can sort of work your way around using silver also in the industrial world. So
Yeah,
I
for
don't really believe.
copper and yeah.
Yeah, exactly right. And I think you can pivot your way away from that. So I actually don't believe in the craze around silver. I don't think we will continue to see
Mm,
the sort of the speed in the growth there. I think gold could continue, basically because it will be a safe haven, and I think it might continue substituting dollars for many central banks.
mm,
And then I think copper for me is the biggest story out there. I think copper is something we will see in the next 2, 3, 4 decades
mm.
being the hottest topic to really support the growth out there. Whether it's the electrical vehicle and the entire renewable
Yeah.
energy story, whether it is data centers and AI, whether it is whatever, that will be the story for me in the next many, many years. And that's also why I think, given the supply out there, given the life cycle of finding, so from greenfield and all the way into production of a copper asset,
Mm,
that just takes 10, 12 years.
mm.
And there is not a lot of big size assets out there. So I think copper for me will be the story of the coming years. And I think that's also one of the places I will position myself when hopefully Colonial Coal is
Yeah.
sold.
Yeah. I mean, I really have the same sort of view on these things. I mean, for me, silver is more of a speculative metal, right? And gold has performed so well, partly because of central banks, and then you have the ETFs demand. So for me, it's really, I see gold sort of in the long term, the next 2 years, performing quite well, and that might have some, it's a good environment for silver to perform as well, and copper as well. So I think we might be more in a secular fundamental sort of bull run, because the sort of demand has changed in terms of central banks. I think they buy 40 to 50% more than pre-COVID days. Then you
Yeah,
have the ETFs market, which, I mean, gold is still only 2% of the global ETFs market allocation. So that's still far below. I mean, even to double it, you're talking about 4,000 extra tons in the inventory for ETFs.
yeah,
So
yeah.
I think there is still a lot of demand to be had, but I don't think the next few months will be the easiest to write. I mean, a lot of volatility will be there, but I definitely
Yeah,
think because of the Trump administration sort of being a little bit more volatile on the political side, that this has
yeah,
some good ramifications for the precious market sector. So yeah, well,
for sure. Yeah, and you can say, I think one of the looking at it also coming from consulting and the M&A space, I think one of the more interesting things that happened in the past 6 months in the precious metals is what happened in Barrick. The fact that a private equity fund actually came in and positioned themselves with
mhm,
a quite big stake in Barrick. That was for me really the pivot in this,
mhm,
because I think precious metals has been a little bit of sort of, it's all the gold bugs on Twitter that are sort of long all the
yeah,
miners, right? But having structural companies that are having a 3 to 5 year perspective in the way they invest go into something like Barrick, I think that was for me really the sign that
mhm,
this is going to be a longer cycle than what we have seen in the past. Because if you go back and look at 2010-11, it was really a short-lived craze,
mhm,
right? It lasted less than a year until it sort of topped, and then it just blew up, right? So I
okay,
think right now, I think we've seen a more gradual increase, and I think that will continue at least for gold in the coming years. And then obviously you have a couple of catalysts that can change it, right? You have Trump as one, but you
mhm.
also have the war in Ukraine and Russia that likely also will change that a little bit. So let's see what happens. But I'm with you there. I think gold will be also a sustainable investment for at least the coming years.
Yeah, yeah, and the reason also I don't believe that the recent sort of volatility is any indication of a top. I mean, putting aside the price action, which was, you can say, a form of a bubble, but I think fundamentally speaking, and as long as this remains intact, I haven't seen really that much of an excitement around M&A really for the big guys, or something you can see that is like reminiscence of the 2000s era really. And neither can I say that the speculative, like the really speculative greenfield has really had this sort of really the sort of big rush like it had in 2021, where everything went up really. Or yeah, so I think there's still quite some ways to go before things really, blow up.
Yeah,
So
sure. I
yeah,
agree. I agree.
yeah, and yeah, I mean, we're sort of, it's been like, I think, 40 minutes now. I don't want to take up too much of your time. So are there any sort of things you want to mention before we end this interview? Anything about Colonial? Anything you're excited about? Just yeah.
I think maybe a little bit of a shout out to the colonial investors. I think trying to do a little bit of what I'm doing right now with digging into the political story. I think that's really something that can make you feel a little bit different about Colonial. I think many are quite reactive in the sense of hoping that there comes something from David or whatever, but trying to really do a bit of desktop research, trying to understand the story a bit better of what I'm also doing on Twitter. I think that would be something that would really benefit
Mhm.
most the retail shareholders. So maybe just a little bit of an advice there, trying to dive a bit deeper than just the surface when it comes to research.
Mhm. Well, thank you for this opportunity to talk to you, Philip, and it was great having you on. And maybe in a few months with some champagne, hopefully, but we'll see how it turns out, right? So
Yeah, thank you,
yeah,
Lucas. Appreciate it. Thank you for having me.
yeah.